I think it's a matter of talking to your accountant as well, because there is, if you buy it in your self-managed super fund, there is a slightly different way of doing this. Is that correct?
Yes, correct. Okay. With super funds here in Australia, you can buy bullion. You have to have it insured, and you can't keep it on site. You've got to keep it off site somewhere, because they worry that you might use it to go to the casino or something like that. You've got to have it off site, so you can't have it at arm's length. So you've got to have it either held with another bullion dealer or maybe in a safe deposit box. But it's very easy. We got our super. We were like most people. We got a letter from my super fund saying, "Dear Mr. Chapman, yada yada yada, global financial crisis. Your portfolio went down by 3%." With that, my wife and I started our own self-managed super fund, and we thought, if I can't make more than 3% myself, there has to be something drastically wrong. And we've made way more than 3% doing it ourselves, and I'm not paying the fees to some guy driving a Jag in Sydney.
No offence to all those financial planners out there, but okay, that is the point. Yeah, you brought up a very important point in terms of mindset as well, and it's the fact that we tend to subordinate ourselves to people we think are more expert and cleverer than us, but also there's also an element of should we right?
That's right.
And there's the other thing is I can't be bothered. A lot of people are so caught up in making a living that they don't see the long-term view, and that will actually cost them at the end.
It goes down to everything. If you don't want to do it yourself, you will pay someone the privilege to do it for you. So that's looking at your finance, for example. You can't be bothered. You give your money over to a financial advisor. He'll do it for you, okay, but he'll take a slice of that. Same as if you don't want to do your accounting yourself, you pay your accountant to do it. He'll take a slice of that to do that for you. If you want to live with that slice, that's all well and good. If you don't, it might pay to do some education, because no one, I've said this before and I'll say it again, the only person that cares as much about your money is you. So it's up to you to try and educate yourself as best you can, so you're not paying so much money out.
That seems to be a point that Lee hammers a lot, and this self-education is actually not expensive, is it?
No, definitely not. Instead of watching Dancing with the Stars, if you jumped on the internet and actually taught yourself 15 minutes of financial education and how the system works, you'll be. What was going to be better, half an hour of financial education or watching half an hour of TV? I don't know. It's up to you. I personally think half an hour of educating myself in finance would be a lot better than watching TV.
Okay, don't worry about that. We're just having a PA system going on. So what I like to do is for you, when that stops, you actually repeat yourself. Okay.
Don't you love answering machines? This is live.
One more time. You said.
So you're better off spending half an hour of your time educating yourself as opposed to watching TV, but unfortunately that's what the average person does. They watch TV, and that's why they're at where they are at. It's not until you open your mind and realise I've got to change that you'll start to look at things through a different light and actually go out and look for things. And that's what I did. It wasn't until I started looking that I actually found things.
And what were you looking for specifically?
Just how to... I was that poor. I had to try and find $5 in my ashtray to pay for fuel. And I snapped and I said, I'm not going to let this happen again. And that's when I started looking. And that's basically the journey I started on, and that's where I am today.
Okay, so now you're basically an entrepreneur. You've got your own business.
Correct.
You've got your own super fund. It's like you're taking back control.
Yes.
Can I use that term,
yes.
Taking back control? Because you've been brought up with sort of the mentality of we will give you an education and that's it.
Yeah, if you basically look at it this way, if you don't take control of your life and your finances, someone will do it for you.
And they don't necessarily have your best interest at heart.
No. So if you don't care about your finances, you'll end up working and you'll be a part of you'll be an employee.
Okay, we're being featured on Stickum, so hello people out there on Stickum. Thank you for dropping in and tuning in. This is an interesting very relevant, I think, topic for this point in time, because everyone is, I guess, feeling a bit shaken up after the global financial crisis. And what I've read is that, in fact, this is not the end of the bad times. There's actually another bigger surprise for people who are not prepared. And basically, can you talk about Lee's just going to do something in a minute, he'll be back. He's going to talk about the fiscal cliff that we've all heard about so much. So people out there in Stickham, if you're interested in what that means to you and your wealth and your ability to be wealthy, we'll just get Lee to give you his take on the fiscal cliff, so-called fiscal cliff that we're coming up against.
Sure. A lot of people, the average person doesn't realise just how bad things are going to get. The US have got to come up to they're coming up to their next amount of money. They have to get their debt ceilings just about reached, so they've got to come up with the next plan B, and unfortunately, it starts to get a bit complex. That because they're printing so much money, the US dollar is falling in value. Every time that you get a loan, the US government gets a loan or another Visa card to pay for healthcare and roads and everything else. That literally gives them another loan to keep going for a little while, but then they've got to try and pay that back. So then what they do is they up the taxes to pay for that loan, but who pays for that?
The taxpayer.
The taxpayer pays for it. So, and of course, Obama, I view him as a bit of a socialist. He wants to take a lot of money away from the wealthy and give it to the people with lower incomes, and that's all well and good, but people want jobs. Now, how can they get jobs if you keep slugging the employers and the business people? They'll leave the country, and the same thing's happening here in Australia. All the business people that make a lot of people, they go overseas where it's cheaper. So, and which country is making more money? China, because they can make things
cheaper.
So it doesn't really matter. Cheaper, exactly. So it doesn't really matter who's in power, whether it's Romney or Obama. The problem is still the same, that you're not going to pay off anything. And because everything's priced in US dollars, it doesn't just affect the US economy, it affects everybody, because nothing is backed by, no currencies are backed by gold like they used to be, and all currencies are backed by nothing. And every country is just printing more and more money because they don't want China to become the next world currency, reserve currency. However, unfortunately, China is the only one with enough gold to back everybody's debts. So the US, they want to stay the reserve currency, but I don't think they can. It'll happen by default or by de facto, that everyone will start either trading in gold or Chinese dollars, because they're the only ones with the currency that's actually worth something.
So this is a bit of history that you'd be interested in knowing, folks, that until 1971, yeah?
Correct.
The US had their dollar pegged to gold.
So if countries wanted to trade between each other, they didn't have to trade large blocks of gold. They could trade US dollars because it was backed by gold. So that's where you got the money as good as gold. It was backed by something. And if you look at some old US notes, and even here in Australia, some of our old notes, it said on the bottom, redeemable for gold. Now, after the Nixon got rid of the gold standard, they could just print money at will. No one could recoup their dollars for gold anymore.
That has ramifications, okay? And that's something that you want to basically jump online and research, like Lee talks about, and I do. Spend less time watching television, and go do some homework on understanding.
Just even if it's half an hour, just look at something, because when the US decided to cut the ties with gold, they could print as much money as they wanted, and the US flourished, and most of the Western world did, but they've printed so much money now that they've devalued their dollar so much, and that's had an impact on everybody's dollar because nothing's backed by gold anymore.
Okay, so everyone's running around being afraid, but trying not to show that they're afraid that this thing is just going to collapse in a heap.
Correct.
Okay, and the only tangible that is internationally recognized is?
Gold.
Gold and silver.
Gold and silver.
Okay, so if people tell you that it's a barbarous relic, or people tell you that it's old-fashioned and it's no longer, who trades in gold these days and laughs at you, I feel that you would be best for you to go do your own homework, but also take on board like what Lee said, how well are these people doing? And if they're not financially independent, the question becomes, why are you listening to them?
Exactly. You have to remember that people go mad in herds and come to their senses one by one. I've found over the last 6 months I've sold more bullion in the last 6 months than I did of all of last year. More and more people are realising there's something wrong with the financial system. I don't know all the ins and outs of it because the media make it sound very technical and hard to follow, but a lot of people are starting to wake up and buying precious metal as a hedge against their funds going down in their super funds or their 401k or even their own personal bank accounts.
Wow. Okay, so just touching on that, in your own personal business that you see, you basically are at the grassroots level and you've got a finger on the pulse. People walk in and out of your shop every day and they're coming in to sell silver or buy silver and gold?
Buy it. I've had more people buy it than sell it.
Wow. Even though the price just went up?
Yep. Even when the price was up, probably two weeks before the election, where it was up around $1,700, people were still hanging on to it, but they were buying
gold. So we're talking about gold,
silver. Yeah, gold and silver. Yes.
Wow.
Yep.
That's saying something because I read some of these other non-mainstream economic commentators saying that gold could go up to something like $2,500 an ounce next year. I mean, is that far-fetched or is that a possible reality?
When more and more people from the herd wake up, as more and more people wake up, there'll be more of a demand, and that's just the demand side of it, and that's not taking the factor the inflation side of it, the printing of more money. That'll push the price up as well because there's more dollars chasing the same commodities.
Okay, so in those terms, I've got a question from somebody, let's say, who doesn't understand this. They'll say if the price of gold goes up, the price of other things will go up. Correct. So isn't it just the same after all?
It is to a point, but the problem that it brings is your pay packet doesn't seem to keep up with inflation.
Have you noticed that, folks? Your pay packet or your wage increase, if you're lucky to have an increase, because a lot of companies have basically kept wages at a point and not given raises to their employees. So inflation is going up, right? Your pay packet stays the same, so your cost of living goes up. But the good point is if you actually had the foresight to invest in gold and silver, that will go up as well.
That's right, but it'll go up quicker than you're going to get paid from a boss, or paid if you're getting some kind of money from the government. Okay, even that won't be able to keep up with it because the inflation will go higher than if you're getting a wage or if you're getting funds from some kind of benefit from the government.
All right, if you're on welfare.
If you're on welfare or some kind of, yes.
Okay, because you know that I don't know about you folks in America. Have you noticed the price of groceries going up? Have you seen the price of gasoline going up quite quickly relative to your wages?
That's right.
And for some people, they are almost lucky that they still have a job.
Correct.
Yeah, for those people with jobs, and then there's no job security. So would you say to a person who's thinking now that I have some degree of job security, that what percentage of their take-home pay would they put into gold and silver, let's say?
I'd say between 5 to 10%. If you get 5%, would be a good start. If you put 10% away, that'd be even better. But yeah, I'd say 5% would be a good start. So instead of having a pizza and a bottle of Coke on a Friday night and maybe a video or a DVD, just do some education on the internet and buy yourself 1 ounce coin of silver.
Okay.
And that'll get you started.
Right. So, it's compounding, isn't it? I mean, 1 ounce of silver as a coin may not look like a lot at that point in time, but...
That's right. If you bought one ounce a week, over a year you'd have 52 ounces of silver.
And that wouldn't hurt your budget?
No, it's only a little bit. You take a little bit out of every time. But if you want to really get started in it, take your money out of the bank, leave some in there to live on, and the rest of it just go and buy gold and silver with it. Or if you can from your 401k, buy gold and silver with it. or if you need to have a garage sale, make some extra money, go and buy gold and silver with it. It's not hard to get into the market. It's really not.
Okay, and you're seeing a lot of people coming in who are not necessarily people who are extremely wealthy, but just the average person.
Average Joe off the street, Mr. and Mrs. Citizen, just coming in and buying, taking their money out and buying gold and silver with it. Yeah, because they see it's making more money. The evidence is there, it makes more money than holding it in a bank.
Wow. So that's pretty compelling. Now the thing is that a lot of people will also get frightened by the fact that the gold and silver prices tend to be a lot more volatile.
Yes.
Okay, so how do you deal with that volatility?
The hardest thing that drives the market is greed and fear. The biggest thing you've got to try and do is just try and get away from that. I mean, you don't ring up, very few people would ring up their real estate agent every day and say, has my house gone up today? And it's the same with gold and silver. You just need to buy it and hang on to it. It's if you're worried about the price too much, you do your head in. You just really want to just buy when it's low, watch it for a couple of weeks, buy when it's low, and just buy some.
Okay, so it's this is where the mindset comes in as well. What can people do to, if I call it your mindset like a muscle, what can you do to strengthen it so that when the volatility is there, you don't decide to go into a corner and cry.
To panic and yes, I mean I've been in the same boat, but I've just gone on what I've looked at and historically what it's done, and I know there are dips in the market when people sell off a lot of gold and silver, and it goes back up when places like China buy a lot of silver because they need to make iPhones. It does go up and down, but you've got to look at it long term. If you look at the long term history trend of it, yes, there is hiccups, but long term you'll be out in front. And as long as you can get your mind around that, yes, there are going to be hiccups in the road, like speed humps every now and then, but that's not a point to go and sell your car just because you've hit one speed hump. You don't trash your car just because you've hit a little speed hump in the road. You just hang on and keep driving, and it's the same thing. You've got to change the way you mind things. As soon as you buy silver, you've become an investor.
Okay, so you're talking about getting the emotion out of the investment.
Yes.
So personally, what can you do, like little tips, tricks, exercises that allow you to be detached?
The best way I thought of it this way: when you have your money in a 401k or a superannuation fund, are you emotionally attached to it?
Possibly some people are because they're looking at retiring. That's
right, some people are. But if you're in your mid-40s, early 50s, you've got your money there. You just go to work every day. You don't even pay attention to it. Your mind is just cut away from what happens to your money. But you have to have the same mindset when you buy physical. There's no difference. You're still an investor, but one, you've just let someone else look after it, and you hope they do the right thing. But people start getting a little bit nervous when, the responsibilities come back onto me. I've got to be responsible for it. But you still have to sort of disconnect that I'm making the right decision and run with it.
So feel the fear and do it anyway.
Yeah, that's right. It's, I didn't know what was going to happen when I got married, but I still did it anyway. Had my 12th wedding anniversary yesterday.
Fantastic, congratulations. Still talking to each other.
Yeah, that's right.
Yeah, that's good. So, yeah, you can use that. It's a big decision you're making.
It is. But you've just got to get your mind around. You've just got to change your mindset. And that's what I've mentioned in my book as well. You've got to change your mindset. If you want things to change, you have to change. It's not going to happen by osmosis. You actually want things to change, you're going to have to change.
Okay, so you've got to change first before things will change around you.
Exactly. And to give you an example, have you ever noticed that wealthy people don't care what other people think? That's why they're wealthy. That
is a $100 tip there straight away, folks.
They don't care what other people think. That's why they're wealthy. If they listen to everyone, they wouldn't be wealthy.
They'll be with their mates on the couch, whinging.
That's right. They follow their dream or they follow their why, and the money follows afterwards. So you've got to work out what you're going to do with your investment and what you're going to do with your bullion, and whether you're going to pay for an orphanage, where you want a nice house, where you want a nice holiday, whatever you want to do with that investment, you've got to have your why you want to do it set up. As soon as you've got your why, that's half the battle. Because if you don't have a reason to do it, What's the point?
Literally, what's the point? So, and the path of least resistance is to follow the herd.
That's right.
Okay, and so there you go. That was a phrase of wisdom. Know your why, and better have that written down as a plan.
Yep. Stuck on the refrigerator. Put it in your office. Put it in your bedroom. Wherever you need. Have it in a picture of it in your car. Why are you doing it? You need to have a why.
A big enough why.
A big enough why.
Yeah, and also the second part was wealthy people really don't give a rat's about what other people think about them.
Exactly.
Okay.
That's why they're wealthy.
Yeah. So that's a point that is it's not being facetious here, folks. It actually is a very pertinent point that we sometimes get so caught up in
what other people think.
Yeah. What will the neighbours think? That's a phrase that even creeps into our vocabulary. Oh gee, what will the neighbours think? And the answer is, well, who cares?
That's right. I mean, as soon as you think about investing in gold and silver, I can honestly say that most people would go and ask their mum and dad or their best friend. Now, the problem with doing that is that it's all well and good, but you'll probably find that your mum and dad and your best friend may be employees, and they're not in the wealth. They may or may not be in the wealth section. So once again, this gets back to get your information from people that are going where you want to go. I mean, I love my parents dearly, but I don't take financial advice from them because they're not wealthy. I love my parents dearly, but I don't take financial advice from them. I take marriage advice from them because I've been married over 40 years. But I don't take financial advice from them.
Yeah. Okay. So that's another point, folks. Serious. Be very discerning about who you get advice from and what topic. On what topic, isn't it? Like you say, if it's about relationships, obviously your parents model really a sort of an interaction that allowed them to stay together and still probably speak to each other, that sort of a thing. Whereas if you're talking about money, do you have a mentor that you go to if they're not your parents?
Yes, I have a mentor that's another business owner that's been in business a lot longer than I have, and I go and see him regularly. So I take business advice from another business owner.
Yeah, a business owner who is successful and probably has
Correct.
multiple
It's
businesses.
more years than I have, exactly. So I take advice from someone that's going where I want to go.
Okay, so that's really the gist of it for today's, I guess, topic. We've covered so many things. Among that, what inflation actually does, it's an insidious tax that takes
silent tax.
Silent tax that takes away your money and your purchasing power, and how you can actually sort of turn the ship around so that you get back in the driver's seat, that you are in charge, and that you don't end up having to scrounge when you're retired. Who likes the idea? You've worked hard all your life. You want to relax after that, and it's no fun living on, let's say, welfare or having government assistance, and not being able to live the life that you want, that you've worked so hard for, because you bought the lie that said, when I retire at 65, everything will be rosy. It won't.
Exactly.
Unless you take control of it now.
And I'd say if you've gone through your ashtray in your car to find $5 worth of fuel money, you know exactly what I'm talking about.
Yeah.
Because I've been there.
Yeah, and so, do you have to get to that low point?
Yeah.
Preferably not. Preferably with the information that Lee's going to give you via his ebook, that you can at least start somewhere, okay, to take back control so that you actually know how much money you're going to have at the end, and you don't cross your fingers and hope for the best, right? Don't hope for it, because you really want to be able to say precisely, this is the life I'm going to live in retirement, and it's going to be darn good. So just hold up your book so that people can get to it if they need to start somehow. And it's called How to Make Money in Business and Bullion by Lee Chapman, with added bullion information free. Yeah, so that is available, and your website is?
And go to adelaidegoldbuyers.com.au.
Okay, we'll put that up on the website later, adelaidegoldbuyers.com.au, and they can get a copy of that from you. Okay, so on that note, Lee Chapman, it's been very interesting, slightly controversial, and hopefully controversial enough for you folks to take action. If you do nothing else, just do some research online and take a good look at what's happening in the mainstream versus economic pundits who say the mainstream is just feeding you a bit of claptrap, and then make up your own mind.
Just remember, if you do something, something will happen, and if you do nothing, nothing will happen.
That's very profound.
That's deep.
That's very deep. But it's sort of common sense, which is not so common after all. So on that note, Lee Chapman from SA Gold Traders, thank you very much for your time, and thank you for your wisdom, and we'll probably have you back later to give your comments on what happens in the new year.
Yes, we'll look forward to 6 months from now. It'll be very interesting to see how much the price of gold is 6 months from now.
Yes, and we've actually got on record, you talking about what you think is going to happen there. So, on behalf of your money and your mindset, and to Lee Chapman, thank you very much.
Thanks.
Have a good day, folks.
Bye.
Today's podcast is brought